Can you feel me? Stacks on the desk and a grin so wide. We came for the spark, now we ride. We ride. Leaning close, hold that pace. One more breath, then we race. Sunday night, live trading. Sunday night, live trading. Hands up, eyes up, we're awakened. Sunday night, live trading. Hey, coffee cup gone, now it's all in play. Fast talk, clean cuts, make the whole crowd sway. Names on the board, but the groove don't quit when the baseline hits. Everybody get lit. Leaning close, hold that pace. One more breath, then we race. Sunday night, live trading. Sunday night, live trading. Hands up, eyes up, we're awakened. Sunday night, live trading. Here we go. Turn it up, let it flow. Nice and tight. We're on tonight. Sunday night, live trading. Sunday night, live trading. Hands up, eyes up, we're awakened. Sunday night, live trading.
Welcome to Sunday Night Live Trading, and I hope you enjoyed my new intro video. I spent a lot of time working on that. It's not perfect, but it's pretty good, I think. Welcome to everyone. It's great to see everyone here. Now, we start in 5 minutes' time. I'm going to do a few things tonight. We've got quite a lot to get through, apart from the sort of geopolitical situation, the financial situation, economics. A couple of things I want to talk about apart from that. But so it's going to be a packed session. Welcome to everyone. We're going to take the next few minutes just to let everyone in as we check the sound and so on. So if you are here, welcome to everyone. Say hello in the chat. Say hello to me and everyone else, and just check that I can hear myself. Yeah, I can hear myself. So welcome to you, and just say hi if you can hear me, and make sure that you can hear me properly. And if you can't, let me know. We'll start in a few minutes at the top of the hour, actually 2 minutes from now. So settle down, get some coffee, and let's get going. So please just let me know, folks. Type up something in the chat if you can hear me well. Say hello. It seems to be an empty chat so far, but that's okay. I can see there are people here, 48 people here so far. Good day, Bob. Nice to see you, mate. Thanks for being here. Bob, that's my dog's name, my new dog from Animal Welfare. And hi there, everyone. Good to see you. And hello, Gadasa. So folks, welcome to all the new members too. And if you're not a subscriber to this channel, please take this opportunity to subscribe now and also press the notification bell. If you do that, you will make sure that you get all the upcoming videos and updates and any impromptu videos that I do. I would say you can join the channel too, but the channel is no longer monetized because of the hack 2 weeks ago. I'm hoping to get that back soon. You can't join the channel, but you can become a subscriber and press the notification bell so you don't miss videos. So go ahead and do that while you wait. Good day, Gareth. Nice to see you. Mr. QWERTY, we saw you last week. Welcome back. Mr. QWERTY. And someone is from the Adriatic Sea. Can you believe it? Sea of Steel. And it's a big topical thing, shipping at the moment. So I hope you're safe, Sea of Steel. It looks like you're okay in the Adriatic, I suppose. It's a good thing you're not stuck in the bend behind the Strait of Hormuz, like 1,000 other ships. I don't know if you're transporting stuff or if you're a sort of more of an industrial or a rig or something like that, oil rig maybe, I don't know. But welcome to you. All right, folks, we're going to start right now. So let's get going. And I'm going to go straight into my notes. I'm going to rush through a little bit. I hope not. I hope it's not too rushed, but there's a couple of things we need to talk about. First of all, I deliberately held this, so I've scrolled it back down now, and I'm going to read this out to you and just explain what I mean about this bit a little bit. So new subscribers, and welcome to all the new subscribers. There have been hundreds and hundreds of new subscribers over the last few weeks. I think it's my thumbnails, to be honest. I'm joking. I think it's just it's that time of the year when everyone starts getting trading, markets start moving, things get a little bit more optimistic generally, and people get more interested in trading. So we've had a lot of new subscribers. And let me just read this out to you, new subscribers, so that there's no confusion going forward. And I might have to do this a couple of times. We get hundreds of new subscribers every month who may not understand my videos. And if you're new here, this is for you. For those of you who know me and have been around for years, you'll know all of this stuff already. I tell you some of my trades, but I don't tell you all of them. Most of my trades go in the private group. My own personal trades, I don't put up on YouTube. They move too quickly, and there are too many of them. And why would I tell the whole of YouTube my trade positions? I do give you a general idea of what I'm doing, and I'm very, very specific in my private group. We have exact entries and exits, adjustments, stop losses, hedges, the whole thing. But on YouTube, you are not able to follow me, and you're not able to understand my trading strategy or my calls. You can get a general idea, but that's all. The reason I'm bringing this up is that, as I said, I only tell you some of my changes, my trades, and they also change as the market does. Most influencers, YouTubers, I don't consider myself to be one of those. I do this as a service. It's not my business. I don't make money from YouTube. So you should not try and make money from my calls on YouTube, seeing as this is not a business for me. I'm trying to do this as a service for the public. Most influencers don't tell you their positions. I actually do that here on YouTube. When I'm in a position, I tell you what it is. But that might change in half an hour or a day or a week. Or I may take other positions that you don't know about because you just don't know, right? And even the other so-called traders on YouTube, if they do tell you their positions, they won't admit when they're wrong, when they are wrong. But I do, all right? And no trader is always right. Even the so-called gurus, don't trust in gurus, don't trust me, don't trust them, don't trust anyone. Do your own homework, learn how to trade, teach yourself. I got, like last week, I got I'm exaggerating. Tend to exaggerate sometimes in enthusiasm. But last week, I got tens of emails from people saying they had bought natural gas based on my calls and lost money, and were blaming me. One person last year, around about this time of the year as well, actually, asked for me to pay back the $20,000 or $30,000 that he had lost and smooth things over with his wife as well. So don't do that, all right? Don't do that. Grow some courage and own up to your own lack of skill and your own mistakes and try to do better, rather than blaming some random YouTuber, i.e. me, whose credentials you have no knowledge of. You don't know what I know and what I don't know, whether I know anything at all, and whether what I do know is of any value. I will not, and I'm not going to give my trade positions going forward if this kind of persists, because I don't want to be held accountable for traders who knowingly or unknowingly enter positions based on what I've said, and make terrible mistakes. Whether they're doing, and I'm not blaming them, and I understand it. When I started out trading, there was a lot of time when I clung to advice from others, sought out advice from others, thinking that I may be wrong or that I just didn't understand it. All right. So I understand it when people do that, but just don't do it. Don't rely on other people's trade ideas to make your own trades. They're your trades. It's your book. It's your story. It's your objective. You don't know what my objectives are either in my trading. I don't know what yours are. You don't know how much money I've got. I don't know how much money you've got. You don't know anything about my trading system or anything like that. So anyway, rant over. I just wanted to warn you all that if you are, basing your trading on what people say on YouTube, you're going about it exactly the wrong way. What we're doing here today is interesting. It may inform you. It may give you some extra insight into what the market's doing and what you should watch out for and what opportunities might exist. But this is not here to tell you what trades to take and what trades not to take. You should do that work yourself. All right, rant over, and I hope that you all understand that. Now we can get on to the markets. It's a pity we had to do that. 26th of April, weekly deep dive. There's a couple of notes I've added here in red after the fact, after I printed this out. So if you're in the private group, these red points won't be in the notes. But nevertheless, I added them in yesterday, or this morning rather, just to make sure that I didn't forget. So the next FOMC rates decision We're getting into rates, and I think when the rates cut comes, and there could be a raise, right? But I think we're going to get a cut, and I'll tell you why shortly. They are potentially going to raise rates in Australia, and Australia has got a new, fresh cost of living crisis. They've already raised rates once this year, I think, and about to do it again, possibly. So rate hikes are not off the table, right? Don't ever think that from here rates will only ever go down. If inflation gets out of control, and there's a very good chance that it will, with oil price inflation being the main driver, and of course the delayed effect of tariffs that we haven't seen. If inflation gets out of control, the Fed, and I don't think so because I'm going to come on to my next point, might be tempted to raise rates. However, the rates decision on the 29th, and today is the 26th, right? So 3 days' time, that's Wednesday next week, we get the FOMC rates decision, and I'm going to bet that this will be a hold and the next meeting will be a cut. Kevin Walsh, the new Fed chairman, will start, expected anyway, to start on the 15th of May this year, in about 2 weeks' time, but after the next Fed meeting. So I expect we'll have a Fed hold, and then the moment Walsh is in control of all of this, despite being a self-proclaimed hawk, I don't think he is. And I think he's a trumper, right? So I think we're going to see a rate cut at the next cycle. Keep that in mind as a backdrop to what we're saying. All right. Hi there from the UK and everyone else. Not many people chatting today, so it's very quiet. I don't know what's going on, but please, if you've got any questions, bring them up in the chat. It's a little bit lonely here on the other side if no one says hello or anything like that. All right. Okay. All right, so let's get into, so keep that as a backdrop, all that stuff in red, because the next rates meeting is on Wednesday, but Kevin Walsh is only getting appointed 2 weeks after that. Right, now let's go through some of the numbers. GDP, weak. US Q4 GDP revised to 0.5%. Growth was already weak before the geopolitical shock, and this is critical because the system is not absorbing the stress well. I'd actually say it's teetering, maybe, because it entered 2026 fragile. This is the note, I should have this in red. This is the note I was talking about. I can't do it now. But the Bank of Australia, the Australian Reserve Bank, ARB, is considering potentially putting up rates again with this cost of living and inflation problem in Australia. That's for, there are different reasons. If you live in Australia, I feel for you, man. I watch a few of the YouTube channels about, I used to live in Australia. I lived there for a long time. Lived near Buderim on Mooloolaba on the Queensland Sunshine Coast. A long time. My children went to school there. I bought a house there. We were living there like normal humans, and the living wasn't bad. This is in about 20 years ago. It wasn't expensive to live in Australia. Today, people can't afford to live because of various blunders, including not having a strategic fuel reserve adequate enough to meet this crisis, like most countries did. So. Yeah, anyway, I don't know. So all sorts of things pushing down on GDP. Inflation is probably likely to tick up. I'm not going to go through all the numbers here. You'll be aware of them if we went through last week. But PC is too high. Core PC, too high. Inflation, CPI, all too high. Here comes the next one. Rising by almost 1% in March, 3.3 year on year. And gasoline driving it all up. So it's not broad inflation, but it's energy driven. Doesn't really matter where it comes from because energy will drive up everything else. So the energy inflation will tick into oil price, in bulk oil prices, delivered oil prices, futures prices. That will translate into gasoline prices, which will hike. They're already hiking. And then the gasoline prices will translate into everything else. Cost of everything. Everything depends on oil, not just petrol and diesel, gasoline, as they call it in America, but all sorts of other things, fertilizers, plastics. Basically, everything that we use in our normal lives come from oil. And so everything will go up. And so we're going to have a problem. But I think, nevertheless, the Fed will continue to cut rates. And I think there's a very specific reason for that based on the structural rearrangement of what's going on around the world in the economy. Jobs, iffy, not really catastrophic, not good, not bad. Retail sales, about the same, not good, not bad. Combined macro signal. I'm going to try and get through these notes quicker today because we want to get into the charts quickly. The combined macro signal now is clear. We have weak GDP. Jobs are stable, but maybe softening a little bit. And I think we'll see jobs softening a lot. I think this is not this jobs problem. It's not a problem yet. But I think give it a year or two or three, maximum 3 maybe, when AI replaces all the other jobs that it can. And I was just walking through the shops this morning, buying some groceries, getting a coffee, pushing a trolley, parking a car, going through a gate. All of those things had people operating them. The till, the packers on the shelf packers, everything else. Every single part of that operation is run by humans, and that will come to an end almost abruptly. And those humans won't be needed soon. Maybe not in South Africa. I think it's not going to come here anytime soon. But if you're in Europe or in anywhere in the West or in the East, for that matter, this is coming. So keep an eye on jobs. This topic has not gone away. So we've got stagflation light, as I said last week. We've got slowing growth and rising inflation. All right, M2 money supply. There's a very interesting story here. M2 money supply is expanding. Not because of money printing necessarily. I'm sure there is money printing going on, not just replacement, but actually stacking up money. But M2 is also, in a way, money supply is being influenced by the Treasury buyback of debt, and they've been buying back $15 billion of treasuries every single week. That's a 7 to 8% increase, 7 to 8 times increase in the normal amount of treasury buybacks. It's just abnormal, completely abnormal. So they're buying back their own debt at unprecedented rates, and that is, part of the story as well. And we've seen some of the markets being quite resilient. That's why the stock markets are at all-time highs. Bitcoin is on the rally. Gold and silver dropping back a bit. We're going to go straight into the charts shortly. Talked about treasury buybacks. We talked about the breadth thrust last week. All of these markets moving up so dramatically, 15, 16, 17 days. I'm not sure on the NASDAQ, we can count. But, that many days moving up so dramatically with such broad depth. In other words, many of the instruments in the market moving simultaneously up and to new all-time highs and above the 200-day moving averages, all at the same time. It's a breadth thrust, and it's normally something that continues. Whether this can continue or not is in dispute. Half the world thinks that the market's going to crash next week. I'm exaggerating again. I don't mean next week, literally. And half the world thinks that we're going to the moon. Which side are you on? I'm on the to the moon side, not just because I'm a market optimist, but I think all the signs are there to show that we're entering this last great flurry transfer of money into assets. Asset prices will go up dramatically, and the value of money will drop dramatically. And that's why it's really important that you own assets. And if you can't own a house, a car's not an asset, by the way, unless it's an antique, maybe. If you can't buy a house, if you can't buy physical gold, if you can't buy jewelry or Rolex watches, or investment properties, or any of the other things that people invest in, bonds, if you can't buy any of that stuff, you can buy Bitcoin, you can buy Ethereum, you can buy XRP, you can buy $1 worth of XRP. Maybe not $1, maybe $2. You could probably buy less than $1 worth of XRP. But nevertheless, people that earn assets will see these assets rally. So I'm on the asset side. Inflationary asset boom is what I'm betting on. And others are betting on a deflationary asset collapse. Stock market's down, housing prices down. They're at record highs around the world, particularly Australia and in the UK. They're betting on a deflationary collapse. And there's a lot of people that think that. Half the world, half the economists. The other half think of an inflationary boom. And I think I'm on the right-hand side of that argument, the inflationary boom. All right, so that's just for context, really. Weak GDP, rising inflation, stagflation going on. It doesn't really matter that the real economy is in terrible shape. The important thing to keep your eye on is what are assets doing, not what the price of bread is, although these things affect us all day long and they're terribly painful to absorb. The price of bread, the price of gasoline, how much you pay your childcare worker, how much it costs to service the mortgage or your car loan, all of these things, or how much your rent is, how much your rent goes up every year. They're annoying, but this is not the story. The story is that we are going to see these things carry on moving up, in my opinion. But at the same time, we're going to see a transfer of wealth into assets. And you should own an asset. Buy one XRP. It'll cost you $2, not even $1.50. And that might be worth $10. Every XRP you might buy might be worth $10 instead of $1.50 in a couple of years' time. So that's not financial advice, by the way. And I'm only saying buy $1 or $2's worth, not $1 million worth. Right, and we've got this war going on. Who knows what the story is? No point in talking about oil. It's been up and around about $100. It's around about 90 now. I still think it's going to move down, but it may take longer than I expected. But I think it's going to dribble down. Yeah, so, and the rest of it we kind of know. Now, the cross-asset impact, stocks, strong internals, weak macro. We've got the breadth thrust going on, transfer of money into stocks. We've seen new all-time highs dramatically on the S&P and on the NASDAQ, not on the German 30. And I'm not surprised, to be honest. So we've got rotation going on. We've got this breadth thrust. Do we need a bit of a pullback on the stock markets before we carry on? I suspect so, but maybe it'll be very shallow, just a very, very tiny dip, maybe just the nearest, shallowest Fibonacci retracement or the recent breakout of the all-time high level, the previous all-time high, and then carry on up again. Probably something like that. And I think Bitcoin, my view on Bitcoin, we'll come to it all shortly, is likely to change course, and that we're not going to complete this 4-year cycle, and that we're not going down to $40,000. At least I don't think so. And I'm now 60-40 on a continued rally on Bitcoin rather than 50-50 as I was last week, if you were listening. Natural gas, we'll talk about the charts. Really, it's just a matter of, I think we do a very short, sharp, short squeeze on natural gas. It's just the level at which that happens, I don't know. There is further support down below us, much lower, that we may have to visit between 2.2 and 2.45. And we're currently trading at about just around 2.6. So we may have to drop lower, but I'm hoping that we can squeeze out of the wedge that we've already started with. And then gold and silver, yeah, generally bullish, but I think we may have to get a slightly larger dip, not smaller, larger. And Bitcoin, as I said, I think we've got a better chance now. My view has changed. I'm no longer half-half. I'm 60-40 in favor of the inflationary asset bubble that Bitcoin will participate in. And some people are calling for Bitcoin to be at 250,000 by the end of the year. I think that's a bit optimistic. We might be at 40,000 by the end of the year. I think that would be more realistic. 250, possible. I don't know. Is it going to be 40 or is it going to be over 120? I'm going with the over 120, not quite as far as 250. And then bonds, well, we'll look at the charts shortly. And I think that's all of it. Final synthesis, let's have a look at these final notes before we carry on. This week's defined by 4 forces colliding: slow growth, GDP is weak, labor is soft, and the consumer is pressured. I feel very sorry for everyone that has large debt, mortgages, and cost of living, and children, schools, nannies, and petrol, 2-car families. Man, it must be tough. I'm old enough now to not have any of that stuff. I ditched all of those trappings of life a long time ago, and I sort of don't have any debt. I don't buy stuff. I don't need things. I have my home and my office and my lovely wife and my dogs, and that's all I need. And I've been through all of that. I've had 3 children. They're all educated, very successful. One's working in London as a financier, one's working in China, and one's working here in South Africa, all successful. But I was able to afford good education for them and put them through the best schools and best universities. You may not be able to afford to do that. And I feel very sorry for this next number of generations that are going to have to work through this terrible cost of living crisis as the world restabilizes and finds its feet in new directions in the economy again. So GDP weak, inflation rising again. I don't think this is going to go away, I'm afraid. No matter what Jerome Powell says, that their target is 2%. I don't believe him for a second. Excuse me. I don't believe that. Excuse me. And I think that they, along with everyone else, know that that's not achievable. Excuse me. I'm sorry about this cough. It's been suddenly freezing cold here. We've all got a bit of a sniffle. So that's it, folks. I'm going to go straight into the charts, and I hope that was useful as a summary. And I will get to all your comments. Thank you so much for being here, everyone. I'm not ignoring you, and I really appreciate you being here. And I can see everyone in the room. Guys, Channel, 6F, Sean May, Silky, Prab, Bob, etc. A whole bunch of people here. So I haven't forgotten about you, but I want to try and keep going while we got some momentum. Now, how do we get rid of this? Remove that, and let's put on the charts. There we go. Boom de boom boom. And here we go. Right, folks, now let's look at the charts. And I'm going to start from my master page. And what I'm going to do here is go through the main instruments that I'm trading. I'm going to restart that for the thumbnail. What I'm going to do is to go through the main instruments that I'm trading, and I've got them lined from left to right, from top to bottom: Bitcoin, NASDAQ, S&P, gold, silver, dollar index, and oil and natural gas. And these are all day charts, and the only thing I've got on here are simple moving averages and Bollinger Bands. Nothing else. And a few alerts. You can see these dotted lines are my alarms. Let's set the alerts on TradingView, and we'll go through them one by one. I want to start with the dollar. Now, the dollar is kind of the key to a lot of this, because the dollar and the treasury, bonds and treasuries all affect the market in one way or another, because everything's priced in US dollars. Most of the things that we're talking about, particularly in the US market, are priced in US dollars. You can trade in different currencies if you want to, but we generally trade in dollars, and we understand what the dollar price of everything is. So the dollar has not so far filled this gap. Now, this gap was created when there was good news about the war in Iran and the ceasefire and so on. That was that weekend, and it has not been filled. And in fact, the market's now rejecting the 20 and the 50 period moving average confluence here. And we've actually moved down below the 200 and the 100 and closed below there on Friday. So that's very good news for dollar bears. I didn't think we'd actually do this, and I thought we might have to get up into the gap and reverse somewhere at around about close back to 100 on the dollar index. And we're currently trading at 90. Where are we? 98.5. So 100 to 150 pips higher for a sell is my best idea on the dollar. I don't have any positions on this just yet, but if we did get something like that, that would be something I was interested in. Down up there. Why is that only going one way? Up there and then down from there, the top of the gap, something like that. And if that does happen, and it could still, although Friday's candle was pretty negative, pretty bearish, a bearish engulfing candle with almost a tweezer top at the 20 and the 50 period moving average confluence, and breaking and closing down below the 100 and the 200 is really important. And so we may not be able to do that. And if we keep moving down, if the dollar moves down as it is, it will push everything else up. Everything that's priced in dollars goes up as the dollar goes down. It's the two sides of the pair. So let's say gold on one side, dollar on the other. Dollar goes down, gold goes up. Dollar goes up, gold goes down. And all assets work like that to some extent. And as the dollar has moved down on Friday, and it looks like it wants to carry on moving down, it could mean that the euro, the pound, the Australian dollar, the Canadian dollar, Japanese yen, etc., all the majors will begin to move up by a little bit until we get down to the bottom, maybe another 100 pips. So I don't know, unless this gets reversed and we gap or something terrible happens this weekend, now, in other words, while we're busy talking in Iran, in the Straits of Hormuz, in the Persian Gulf, then this could gap up and reverse. I mean, currencies do this. And so I don't know, it'll all depend. But if we do start moving down, you will want to get long on the other major currencies, short the dollar. If we start moving up, you'll want to get short on the major currencies, long the dollar. And it all depends on how we react to this moving average cluster. Currency traders, you've got a great chance here to pick a real good direction for the majors if you're trading them. This is not affecting the cross rates, but if you're trading the euro, the yen, the pound, the CAD, the Aussie, any of those, you've got a great chance here, because when we get out of this moving average cluster, you will know the direction and you can take the opposite side of the other currency. At the same time, if we move down, we should see assets continue to move up. And it looks like it wants to do that. So that's the picture from the dollar side. Always start with the dollar. It's the most important thing. Going across to the top of the page, Bitcoin is just doing stunningly. And we've got to look at the other charts on Bitcoin to do some more deep dives on this, because this doesn't tell the whole story. We are still in a bear flag. I'm not going to draw it. Maybe I will draw it here quickly. I didn't really want to, but we are in a bear flag, and we're at the top of the bear flag right now. And there it is there. We're not quite at the top, actually. We could go a little higher, but this is the Coinbase chart. All the charts look slightly differently because they all price a little differently in this Wild West crypto market. We have to go back to the futures chart to get a better read on it, which we'll do shortly. That's Bitcoin. NASDAQ and S&P, we got short late on Friday, and I'm looking for this to be a top. This is unsustainable, although it is a breadth thrust. It is due a big correction. Look at the last breadth thrust, and look what happened after. Bear in mind, we had one single day that moved, and we haven't had that on this occasion, that moved from 16,500 in one day, right? To, is that correct? 19,200. So several thousand pips up in a day, not quite, 2,500 pips, dollars up in a day. And then look what happened straight after that. We had a very violent and dramatic correction, which shook everyone out thinking that this breadth thrust might not have legs, but it did. We came back to the 50%, well, in between the 50 and the 618% Fibonacci retracements, and bounced out. That brings us to where we are today. And we're doing a very similar thing. Although we didn't have that big single day, it doesn't really matter. At some point, we're going to have to correct. And if we do correct anything like as violently as that one single correction that took place after the breadth thrust begun, there were no big major corrections after that until now, well, a little bit towards the end of the year. So we're going to need a correction, not just because of that, not just because it repeated what happened last time, but because this market's just ridiculous. It's got to come back. So if we do turn around here where we're now short, we'll be looking for a 50% retracement or a 38% retracement, something like that. As I say, and as I've said, and we'll look at the other charts shortly, I think this is a really good area, about 25.8 to 25.6. This is the perfect area to be buying this if we can get the dip, but we might not get the dip. Same thing on the S&P. That's the NASDAQ, very similar in the S&P. We'll go into the detailed charts shortly. Gold and silver, you know, I've been faffing with this way too much this last week. We've been short. We've been trying shorts. Every time we've been short, and I'm doing it very tentatively, not going gung-ho on this because I think it's a bullish market. I'm playing the retraces and not big positions. I never take massive positions on the retrace plays. I add size on the impulse moves, the bullish moves in this case, not the retracements. I think we can come back down to the 200 period moving average. We'll go to these charts shortly, but I've been trying to sell both gold and silver, and every time I get spooked out by a little retracement rally. You can see gold came back down sharply yesterday, bounced back, almost went back up to the top, and silver did the same yesterday. Even though we're below the channel, we may still get short on these later today or tomorrow. We're still below the channel, below the moving averages. We started moving down. We moved down sharply, broke the low, and then bounced right back up again and closed above the daily 20-period moving average, simple moving average. The fact that we've bounced out of there, made a new low, and then recovered and reclaimed the 20-period, I don't like that at all. So we got out of those both at break even on Friday. So I'm still fully hedged now on both gold and silver, and no direction, no skin in the game in the sense of a direction. Although I've got a long and a short on both of them. And whenever this market turns around, wherever it goes to, I can always take profit on one side. And when I think the time is right, load up the other side and go back in the opposite direction. That's the way I trade. So if I'm short gold and it moves higher, I get hedged. I then have a long position on gold and a short position. As they both move up simultaneously, I can take profit on the long position. The short position is now in a significant loss, or a controlled loss, I would say. And then if it looks, and the timing is important, then I can sell more gold, add to that short position using the profit from the long position that I've put into my account as collateral for the additional short to ride them both back down. Similar story here with gold, with silver and gold. So we're fully hedged on both of them, and I'll try to work that out as we go along. Oil and natural gas. Well, oil, I just think is going to move down, and we keep on selling the rallies. I always do this. And if you've been trading with me for years now, you'll know that my general advice on oil is just to sell rallies, even if they are very dramatic, like this last one. But we've had a sell the rallies policy on oil at ArcisFX ever since, I think going back to 2022, these highs over here. And after that massive rally out of the zero pricing situation. So I think we're going to come back down into here, back down into the 30s and 40s. We'll have to get through 50 and 55. That's a very, very important level on oil. And it's been a floor for a long time. But I think eventually we're going to have to get cheaper. And that floor will go at some point. That's my contention. Don't, well, you can quote me on it if you want to. I don't mind being wrong. As I said at the beginning of this video, I'm often wrong. And all traders are wrong. And so, you know, I don't mind being wrong. But I think that's what's going to happen. Right, that's it, folks. Now, what we want to do is to go into, I'm going to quickly look at the comments and questions, see if there's anything relevant. And then I'm going to go straight into the detailed charts one by one. From now on, we're going to start looking at the stock market charts. And we'll look at Bitcoin and crypto. We'll quickly look at metals, including platinum, copper, gold, and silver. And then I'll finish off with natural gas and WTI oil. Natural gas turned around late on Friday, by the way, just looking at these charts. And the chart on the top right-hand side here is the futures, which have now rolled over. The Henry Hub price has not rolled over. Okay, it depends which contract you're trading, right? My broker at Black Bull has rolled over into the June contract, and that is why we have this massive candle here on this 4-hour chart. All right, it's not a big bull rally, it's a rollover. It looks like a candle because that's the way these charts deal with it. But if you look at this on a 4-hour chart, you'll see, on a day chart, you'll see there's a gap. All right, so that's natural gas. Now, I'm busy trading the spot price. We're going to come back to this in a minute. You can see we bounced out late on Friday. I was hedged. I got long at the bottom. I hedged immediately when we started dropping down. We'll come to this shortly in some detail. So we got long there. You'll know about this at the bottom of that range. We talked about this on YouTube yesterday and on X, or not on yesterday, on Friday. And then the moment we broke down and held down, I hedged the position, got short. I have profit on the short position a little bit, and my long position is negative. And so what I'm planning to do, similar to gold, is, and it looks like it might already be occurring, but let's not jump the gun here. Let's not get over excited. But if this is turning around here and I get a chance, I'll take profit on the short trade that I've just put on, the hedge that I put on Friday, take some profit on that and load up the long side and try and bounce this out of here. My general target for natural gas is 375 and then 425. We'll come to those charts shortly. But let's get into the questions a little bit. Let me have a quick look and see if there's anything urgent. I don't think so. I don't get a lot of chat and discussion in my videos and stuff. I don't know why. Not many comments in the comments section, not a lot of chats. And I suppose maybe XRP. Yeah, we'll look at all of those in a minute, Sean. XRP. More likely to be $1 than 10. Yeah, well, that's your opinion, 6S. That's okay. I'm not advocating buying XRP, by the way. I'm a Bitcoin maximalist. I have a little bit of XRP. No worries. Thanks, Rich. And thank you for being here, Rich. Thank you, guys, Champ, or guys, Sean, as they say in Belgium. I used to live in Waterloo, guys. As a young child, I grew up in the town of Waterloo for a couple of years. And I learned to speak French, well, Belgian, Flemish French, I suppose. French, actually, not Flemish, but Belgian French. It's a little bit different. Yeah. All right. Let's get on with the charts now. And let's start looking at the NASDAQ. So, yeah, so I've given you this sort of macro picture. My general idea is this asset rally is going to continue into the rest of the year. I don't know how long it'll last, whether it'll go into next year or not, I don't know. But for now, I want to be bullish on most things, including the NASDAQ. But I'm now short on the NASDAQ. You can see my 2 short positions there. We can move this up yet one more time. We moved this up at the last live stream. 2 short positions there near the top. We have a hedge position over here. So that doesn't really matter. That's a very tight hedge. But those are our shorts. And we're looking for a move back down to whatever level. Now, I've drawn in the Fibonacci's, as I said. There's the 38% fib at 25,650 now, because we moved higher. That fib's moved up a little bit. But I generally think that a move down to this black line in the center, and that's at 25.8, which is the top of the head of the horned beast here. They're the horns, right? Horns with the red blobs on top. That's the head of the horned beast. I think we can return to the black line, or maybe there's a couple of places we can turn around here. Maybe only down to the trend line. And that's it. Maybe that's as low as we get. I think we'll probably have a bit of a better go than that, maybe. Maybe just down to the trend line, maybe down to the top of the green block, which was the previous all-time high. That's always a good level to aim for. And if we do get back down to the previous all-time high, you'll find that the market will often overshoot it a bit. And probably that's why I think that this level at 25.8 is the most attractive to me. I don't know if I'm going to hold this short trade all the way down towards that level. And if we can get that far, I have no clue. But if we can, I'll try. I'll be watching the trend line break area very closely for a bounce. And then I'll be watching the green block top, the previous all-time high. And that's at 26,300, or a move down to 25.8, which is the head of the horned beast. Not quite the 38% retracement. And really, we might have to go all the way back to 38 or even 50, which is what happened on the last occasion, a very sharp pullback. You can see my blobs already there, and I'm going to leave it there for precaution's sake, just to prevent me from getting too excited about any pullbacks. I probably won't take the short trade all the way down that level, but maybe we'll have to get there. And then you can see I've got a couple of other arrows drawn right up here at 30,000-ish. That is basically my target, right? So this is kind of what I'm thinking. This is a day chart, if we can kind of do something like this might be kind of, I don't know. That would, that's only the middle of the year. It's too quick. It's not going to happen. So that doesn't make any sense to me, but let's forget this for now. So there you go, folks. I don't know what's going to happen thereafter, but I think we can still get that pullback. And I think the next move at some point next week has got to be a move back down and to any of those levels that I spoke about. And I'm going to use the NASDAQ and the S&P alongside each other. S&P is looking very, very similar. NASDAQ's through its top red 200-period Bollinger Band. The S&P is not quite at its 200-period Bollinger Band, but very close. There it is there, that skinny red line. And it's not quite as overbought as the NASDAQ is. And a decent retracement on here won't actually take us that far back because it hasn't been as aggressive and violent. And a 38% retracement would take us into this zone over here. And the point of control on the chart, which is actually a decent area to aim for, and the moving average cluster. So S&P looks like it could do that quite easily without scaring too many people off. I don't know, something like that on the S&P. So, but I think these are all, if we are going to get these very sharp dips back down, it would be a little extraordinary. And I don't think we're going to be able to do that. But I have to be aware of the fact that we could do that based on, and anything could spark this off. Anything could catalyze it. Anything really. And the reason I'm sort of, fixed on the idea that we might have to come back pretty sharply is not only because we're so overbought, so overextended, the RSI has gone into orbit over here, but because on the last occasion out of that breadth thrust, we did have that very sharp retracement, which came back almost halfway. And that is normal. That sort of behavior, massive move, 50, 60% retracement, and out we go, normal. We've had the massive move, but we've not had any retracement. I'm not saying we were going to get it either, but I hope we do, at least a little bit, because I'm short. So that's all the stocks. And then I don't want to talk about the names because we don't have time. We do that during the week, and we do it in our live streams during the week, and we do it in the private group. But I must say at this stage, if you'd like to join us in the private group, you can do so. There's a link below this video, and you can join the private group. You can see all the trades that I take. Click the link, check it out, see what you think. I'm not going to go on and on about it, as most YouTubers I want to do. If you are interested in trading with us, you'll find your way there, I'm sure. All right, now that's that. Now on Bitcoin, I want to show you this. I want to show you two charts, 2 day charts on Bitcoin. One showing that we're underneath this rising bear flag, potential bear flag. And I actually want to draw it perfectly so that we can get a better read on it. Just give me a second. A rising, it's actually very neat. A rising bear flag. Let's just find the top. Okay, we've got a top here, right? But with spikes through it. So let's cover those spikes as well. Let's include them in the family and say, and have we actually broken out through the top? And have we rejected the flag top? And are we going to move down? If we do move down, and if this is a bear flag, we're going to do something very similar to what happened at the last bear flag. And it's been my feeling for a while that we kind of 50-50, as I said at the beginning of the video, that we are going to move down to 40-something thousand, or if that's it, 60,000 was the bottom, and the next move is up, and the next move after that is up, and the next move after that is up, and so on and so on. I really don't know. But I must say, as I said at the start, that my thinking is angling more towards this is going to bust through the top, get up to the 200-period moving average at about 85,000, the underside of this previous ledge, test that, faff around there, maybe a bit of a sharp correction, then up to 98,000, that previous swing high, more faffing around and correction. We'll probably get stuck in that zone for quite a long time if we even get there. I'm not saying we will, but if we do, it's going to take some effort to churn, to chew through all of this stuff here. So if we get up into that area, it's not going to be easy. Where's my path? So up to the 200 period, that purple line, the bottom of this zone, and then probably a bit of faffing around for quite a long time, something like that, and then up to the top of that zone, and a similar sort of thing. And it all depends on catalysts and news and Kevin Walsh and the Fed and all that sort of thing. But maybe that's it, something like that. Maybe we're forming a structural rally on Bitcoin and we're not going down to 40,000, and this is not a bear flag. And in fact, it's the bottom of a serious correction, which took us from 127,000 down to 60,000 precisely, bounce out. That took place in February. We're in May now, almost a couple of days we'll be in May. So it's taken time. It's taken its merry time, but it could take longer. And I will also just want to show you one more thing. When we get stuck in these ranges, like Bitcoin does sometimes, like there, like here, it can go on for 6 months, 9 months, thereabouts, like there, down at the bottom. These all lasted, that one, for example, August, all the way up to October, right? Half a year almost, not quite. August to October, September, October. No, that's only a quarter of a year. So a quarter of a year. We've had about a quarter of a year, and maybe it's time for us to move up. So I'm long on Bitcoin. I have a small hedge, a 50% hedge, which I'll undo and remove if we break through the top. And what I'd like to see is a break through the top, retracement back to the top, and a hold and a bounce out of there before I add any more size or make any more adjustments. And then all the rest of the cryptos will follow. I'm not a big advocate of all of these coins down here. The altcoins, where are they? I can't find them now. I've removed them all even. So I'm not a big fan of the altcoins, but I do like a couple of coins like XRP and Ethereum, maybe not so much Solana. And I'm not going to argue with you what are the best coins, which ones have a chance, which ones are better than Bitcoin, which ones aren't, which ones are going to go by the wayside, like 99.9% of them will, which ones aren't. But generally, I'm going with the big four: Bitcoin, Ethereum, XRP, and Solana. And I've got a bit on all of it, but mostly on Bitcoin. And if Ethereum, XRP, and Solana fail, it makes no difference to me. I'll load that up onto Bitcoin. I'm a big Bitcoin bull. Now, so yeah, I think it's okay, unless we have something dramatic. And remember that if we do start moving down, I'm going to start hedging quickly. And if we look at the futures chart, which is not moving today because it's not active on the weekend, so that's Friday's candle, and not catastrophic, not a big sharp rejection from the top of the flag. We got up to the bottom of the CME gap, which is super important. The first test of a major CME gap that occurred during this massive liquidation event, creating not only a very clean CME gap in the middle, but this yellow zone is almost completely devoid of volume too in this instance. And so you can see on the right-hand side here on the chart, there's no volume there. And in the volume in the CME gap, there's zero volume. But around that CME gap, there's very little volume as well. It's a fair value gap, a massive fair value gap with a specific CME gap in the middle. And we tested the underside of that last week. We haven't got through to the top of it, which we will have to do at some point. And we haven't got beyond the top of it up to the top of the empty zone, which we probably will do at some point. Could even be like today or tomorrow or next week. All right. So the other reason I think this is less like a bull flag, less like a bear flag, is because of the last few weeks' move in the steady dribble upwards as we've had more and more bad news out of the Gulf, more and more stalemates, bombings, attacks, tankers being seized, oil flows being disrupted. The whole world's economy is teetering as a result, but Bitcoin has just chugged on upwards without a care in the world if you look at the chart. Of course, Bitcoin has a lot of cares in the world. So I'm very bullish on it, but I will hedge, reverse, swap, whatever, at a moment's notice. And if we are going down to 40,000 of Bitcoin, the rest of it will come down dramatically, including XRP. And you did ask Sean about XRP. I'm long on XRP. You can see my position. I've got, I'd say about a quarter of the size on this, maybe not even that, that I have on Bitcoin. And the same applies to Solana, and the same applies to Ethereum. Maybe a 20% the size of Bitcoin, my Bitcoin holdings on each of them. I also stack. I also save in Bitcoin. So that's another whole story. I don't save in dollars. I save in Bitcoin or pounds. I don't save in pounds. I save in Bitcoin. So it's just a different way of it. You've got to save your money somewhere. I'd rather have it not in pounds or dollars. So this is XRP. And if Bitcoin does move up, and it depends on your opinions on the use cases for all of these, but there's certainly loads of good news. I'm not a crypto, I'm not one of the, what's the word that they use? A crypto, these guys on YouTube, crypto fanboys, the gurus, the crypto boys. I'm not one of them. I trade lots of instruments, and I'm not married to crypto totally, but it is my favorite asset at the moment, apart from property. I think crypto And there's a big debate between the two of them as well. You go and Google it or YouTube it. What's better, crypto or property? And there are good arguments for both. So rather have both, right? As I said to you, if you can't have property, buy some crypto. If you don't want crypto, buy some property, but buy one of the two if you can. And it's not financial advice. That's just what I'm doing. So here's XRP. Does this look like a bear flag or is this a bottom? I would say it looks like a bottom. And I'll tell you why. And I'm long on it. So I'm not just telling you why. I'm doing what I'm telling you that you might consider doing yourself. I'm actually doing it myself already. I want to draw a little thingy here. So here we have a big spike down. That was the liquidation event with a tweezer bottom and an immediate recovery the very next day. Immediate. We recovered the entire drop right back to the top, and we have not sunk again back down since then. Yes, we've faffed around in a range. We've made a double bottom over here with what looks like a W pattern, to be honest. And you can draw it if you want. Let's try and draw it. So I have, I've got, even though it's not my mass, it's not as big as my holding on Bitcoin, I've got a fair chunk of this. So this looks like a W pattern. And I think we're going straight back up to the top of the W, like any time now. And that's above $2 at $2.40. And once we get to 240, there's a long way that this can go up. And I think that, people are calling for $10, 15, 12, 8, 10, whatever. I don't know. I don't really mind. But I think we can get to the top at least. And it's not my favorite or main play. And I'm into Bitcoin, not so much the other stuff. But I have a bit of the other stuff as well. And I think this is a W bottom. And I think that sell-off was immediately recovered and we can ignore it. And if you did ignore that, I'm going to put my thumb over it. You won't be able to see my thumb over it, of course, but I'm going to do it visually. You do it now. Do it right now. Take your thumb. If you've got that chart that I've got in your front of you, put your thumb over that first spike down, the big one, and just look at the rest of it in isolation without that. And it looks like a bottom for sure. And that just overshot. This one just overshot. And I think we're going up. Target is 2.4. Now, someone said in the chat, more like $1. Well, good luck to you. If you're going to be selling XRP at $1.40, hoping for it to go down to $1, you could be right. And that probably is the next target if we are moving down. But I don't think we're moving down. I don't think we are, but I might be wrong. You might be right, or you might be wrong, and I might be right. I don't know. That's trading, folks. We base our stuff on probabilities. The probabilities here, based purely technically for XRP to move higher, are very good in my opinion. And the probabilities for XRP to move higher, ignoring the charts and based on the use cases and what's going on in the crypto market, who's buying what and what's moving at the moment, I think there's a very strong bullish case for XRP as well, and Ethereum and Bitcoin and possibly Solana. I don't know about Solana, but probably too. As for the rest of the million other altcoins, I'm not interested at all, although I've got a few of them, I have to be honest. I've got Zcash, ZEC, Zcash rather. I've got a little bit of this and a little bit of that, but nothing that will be more than, a little bit of a sting if I lose it. A tiny sting, not even a mosquito bite sting. So that's how little of it I've got. Maybe a small spider bite, but not much. All right, so that's cryptos. And I think before we move on to, let's just quickly finish off with metals. I think we've done stocks, we've done cryptos, we'll finish off with energies. Now, metals, none of these markets are moving except for the cryptos right now, as you know. So this Bitcoin chart is moving. And I'm actually tempted, before we go to the metals, I'm actually tempted to add some more during this day's play, as you can see what's happening on the 15-minute chart. I like the way this is holding over the weekend. Don't be tempted to, if this started rallying up dramatically on the weekend, on Sunday night, I'd be very wary of it. I wouldn't, probably wouldn't get long. But we're just moving across the side of the page. A little bit of a dip yesterday and holding these moving averages on the short-term charts. If this just does this the rest of the day and we start in a few hours' time with a bullish, optimistic note to the week, which we could well do, I think Bitcoin could just keep on moving up. All right. So that's my thought on that. I don't know why we switched back. No, silver and gold. As I said at the beginning of the video, I've been trying to sell both of these. I don't have a great deal of conviction in the short side. I've got a lot of conviction on the long side, but I don't think we're going along from here. Although I'm now starting to think maybe we are. If we do start this coming week with everything moving up, with good news from the Fed, with comments here and there, with maybe maybe Warsh says something, or maybe Trump says something, or maybe there's a deal struck, or maybe the Iranians capitulate, or maybe Trump capitulates, whatever. All these markets could start moving up. Now, a lot of people think that gold won't move up when things settle down and when there's peace and there's no problem and there's no risk going around the world. That's not true. Gold moves on its own pace, and gold will move with excess liquidity, just like every other asset. So gold doesn't need war and famine and disaster and misery to rally. It can rally along with everything else. And it will do if we see massive moves in assets, as I expect we will. So so going back to this chart, I think we've got to get back down a little bit. I'm just a little bit worried. I'm happy to buy gold at this price, and maybe I should do when the market opens. Excuse me, later on or next week. Let's take a sip of Red Bull. Maybe we'll just end up taking a nibble around about here at the 20-period moving average, within the moving average cluster, and expect that we won't get back down to the 200-period moving average and this breakout point. This is silver, not gold. Sorry, I was talking about gold, was I? So, but if we do that, I think we're going back down to $50, 55, then 50, maybe slightly below 50. There's the breakout ascending triangle. Anyway, we can be patient. I've just got hedges on both gold and silver, and we'll see how we go. And if whatever direction these move in, I'll get into that direction. So I'm basically neutral. But my overall view on gold and silver, and particularly copper, are bullish. And I think these are due to continue to go up with regular retracements as normal. Copper, I think, could do better than the rest of them because of demand, excess demand for copper. And we keep on saying, yeah, it's holding the top channel line. Well, it still is. But Thursday had a big sharp sell-off. It's probably a bearish sell-off. A tweezer top with a bearish engulfing candle. That's very, very negative. But look what happened on Friday. We should have carried on moving down, but we did not. We bounced out of that level, which is the channel top. Let's look at the 15-minute chart. This is what happened on Friday. All right? Bouncing out. So I think copper, I don't know. Let's just say I don't like that candle at all on Thursday. Friday didn't continue. That's a good sign. We ended up with a full stop doji candle above the channel line. And, at some point we're going to go up. We've got good longs on here already. One long position, a good one from $5.20-ish, and one from $5.90, and we're currently trading at $6.09. So that's copper. All right, so basically bullish across the board on metals. Platinum as well, I suppose, and palladium for that matter, but I'm not trading these. I don't have I don't have any interest in trading those. I'd rather trade stuff that's easier, better, more in the news, more interesting, and is likely to move faster and better. Now, natural gas, let's look at two things here. It's difficult to look. Let's look at the Henry Hub futures price. How's our timing going? We've still got 7 minutes left. All right, so let's quickly switch charts here. Natural gas, where's the NYMEX price? There we go. Right, so the NYMEX has not yet rolled over. The June contract begins next week, and I hope we can get something here. Yeah, so this is the previous is the May contract, and the NYMEX on Friday on the 4-hour chart, and you can see we formed a little reversal doji candle there, and then the next candle rolled over a little bit, and we closed sort of insipidly on Friday. This is the futures at the Henry Hub. Now, if we look at the futures chart at Black Bull, my broker, they have rolled over. They rolled over on Thursday. Let's have a look at the day chart. Friday. Hang on. Yeah, Friday. Yesterday. Rolled over, not yesterday, Friday, 2 days ago. Rolled over on Friday, and that looks like a rollover candle. It's not a rollover candle. It looks like a bullish candle. It's not a bullish candle. It's a rollover, which you can't see. And if we look at the 4-hour chart, it just shows us one large candle. But basically, it moved from there to there as we rolled over. And the new contract price closed, the June contract closed at $2.67 on Friday, $2.67. All right, I'm not trading that because of the rollover that I've just showed you on the futures at my broker. So my broker is now trading the next contract, the front month, the forward month. But it has not, some of you will be trading the May contract, some of you will be trading the June contract right now, and some of you will be trading the continuous or the spot price. I switched over to the continuous price here at Pepperstone, on Thursday to avoid that messy rollover, and also because I had to close this trade in a loss, right? So I closed the trade in a loss. We got our last long trade was at $2.60. We had a couple of other positions above that, and my contract rolled over. I don't have a choice and this is the problem with trading futures. When the contract rolls over, your broker will close your current position and award you whatever gains or losses you have on that position. And some of the brokers will roll you in immediately into the next month's contract. My broker doesn't do that. So I'm out. I took myself out. I closed it deliberately myself. And at $2.59, I bought this contract here on Pepperstone, not a contract, an ETF at $2.59. And let's look at where we are right now. We're at $2.54 now, after dipping down to $2.50, just about. Now, $2.50 is a very key level. It's also the top of a big rollover gap that needed to be tested. We bounced off it, doesn't mean we're not going to move down. The danger here is, and I want to go back to this chart. The danger, in fact, I want to go back to the Henry Hub chart. I want to do a little, I don't want to rush through this, folks. I'm doing this for your benefit so that we're pretty clear about all of this. I don't want to, I'm looking for something on this. Yeah, no, it's not on this chart. There's a rollover gap just below where we're currently trading. I can't remember which chart it's on. I think it's on my other chart. Please bear with me. I just want to make sure I get this right. Oh, yeah, oh, there we go. Okay, so it's this pink zone. So the pink band. There's a rollover gap further down, and I can't find it now. I had it drawn in. I don't know what happened. It's somewhere between 2.2 and 2.5, right? We could get that low, although we did touch 2.5, which is the top of that gap. Maybe that's enough. I don't know. And we bounce out of there on the futures. I can't find it right here. Let's go back to the spot price where I'm trading, not the spot that continues. And so, as you know, this is my exact trade position. Forget all of the bump that I just talked about. Let's focus in on what I've actually done. My exact trade position on at the end of the week was here on the continuous. I took the loss on the futures contract positions, got out of those. If I hadn't done it myself, they would have done it for me. And I was fortunate enough to be able to buy this ETF at an identical price. So I didn't lose anything on the price transfer, on the switch. But we carried on moving down. And, so I bought at 259, there it is there. And we almost immediately kept on moving down. Even though we had an inverse hammer candle with a spike low, but before that, we kept moving down. So I hedged the position. So I'm now fully hedged with a tiny hedge, really, it's a few cents apart. And we're bouncing out now late on Friday. My hedge position is still in profit. But the moment we keep on moving higher, we might gap higher this weekend, like in a few hours' time. That means my hedge position will run into a loss, which I don't really want. I'd actually like this to keep moving down rather than up at this point, because I've got this long position here, which is hedged with a short position here. And if we bounce out of here right now, today, I'm going to have to take a loss on the short position and let the long position run. However, if we move down and reverse somewhere lower down, I can take profit on the short position rather than a loss, and then add to my long position and shore up that long trade for a bigger profit. So once you get hedged like this, actually, you prefer the market to move in the opposite direction to your original trade position in order to gather a sufficient profit from your short hedge to be able to turn the hedging process into a profitable advantage for you rather than a defensive mechanism of protecting a loss. That's the way I see it. I see hedges as opportunities and not protective stop losses or stop the loss. And so that's the way I do it. So if we do move down, I'll try and get some profit on the shorts and add the longs when we turn around. I have no doubt that we're going to have a sharp, short, and violent, potentially sharp, short squeeze and move up very dramatically, heading up towards 375 and 425. It's possible, however, that we may have to get back down to 220 before that happens because of that rollover gap that's slightly below us, that we touched the top of it at 2.5, the bottom of that gap, and I can't find it on my chart. You can have a look at yourself. I think I put it up on X too, is that 2.2-ish. So we may have to get that far down before we get this dramatic sharp short squeeze, or we may not. We've already had a bit of a turnaround on Friday, a nice reversal there on this continuous price at the Pepperstone ETF. and maybe with a bit of luck, we'll gap up. My general idea is that natural gas is going to be bid up over the coming years as a sought after commodity. That's all. Sought after commodity in demand, with supply side restraints that are currently being imposed upon us by limited LNG capacity in the US, strikes on the South Pars natural gas fields in the Persian Gulf, and strikes on pipeline infrastructure and fields in the Russia-Ukraine region, and a continuous demand and increasing demand for natural gas against what's the word? A stressed supply situation should lead to a sharp short squeeze, but we might have to wait for the seasonal advantage as well. I do believe there's some pretty interesting weather coming in the next few weeks, next week, that could push these prices up, hurricanes and so on. I don't know about the news, but we'll look at the weather forecast shortly after this meeting, after this live stream meeting with you. So that's natural gas, folks. I'm still hedged, and I'm going to have to exit this hedge anytime soon. Either if this market moves up in our favor, I'm going to have to take the hedge off for a loss, or if the market moves down against my initial position, I might be able to profit from the hedge by taking profit on the short part of this hedge trade position, lower down, and then reversing and adding extra longs onto the longs that I've already got on. That's my strategy. And oil, well, let's look at oil, and we can look at uranium and lithium as well. We're on this page. We sold some more oil on Thursday, and Friday we saw a down day, closing below the channel bottom and fractionally below the 20-period moving average here on the day chart. I think it looks fine. I don't think personally that we're going to get much above $100 if we're even going to ever get back there again. We could do, and we might even get slightly higher, but I think that's less likely, but it's very, very possible. And if we do get up higher, there are a couple of areas that I'm very interested in looking at. First of all, the channel center line, and then this gap, the bottom of the gap. And that's that gap probably needs to be resolved at some point. Maybe not. Not all of the oil gaps get resolved, and maybe this one won't. But 98.80 is the bottom of the gap, and about $100 is the top of the gap. 101 actually. So 98.80 to $101 is that gap which might need to be refilled, and it's also where the channel center line roughly is at the same time. So if I draw this up from today's area, Monday, up to the channel center line, you can see that's in line with the top of the gap at about 101, and don't rule this from happening out, all right? Something like that. But whether we've got to do that first or not, I think the end result is going to be the same, and we're going to move down to the red line, and then beyond the red line to the purple line, and beyond the purple line down to $68, which is the last gap that was created when this war started, and we gapped up, and we've now gapped down. So we got a gap at $100, and we got a gap at $68. Do they, as I said in the last video, do they both need to be filled, or is the market going to completely ignore both of them, or ignore just one of them and fill only one of them? I don't know. But barring that happening, we're probably just going to keep on moving down and dribble down, and there will be spiky moves all over the show as more and more news and stuff comes out and the negotiations take place, if they're going to. So it's not going to be clean. It's not going to be neat. It's going to be messy and dirty. But that's what we're trading, right? It's oil. It's meant to be like that. And then lithium and uranium, I'm still long. Not much to add there. Uranium came back a bit yesterday, but as I said in the last live stream, actually one of the videos last week, uranium's got potential to go up to $135 over there and then carry on sharply. We're only at 50 now, thereabouts, 55. So we could 3x it just to get to the top, or 2.5x just to get to the top, and then much, much higher beyond there. It's a slow-moving instrument, as I said in the last live stream. So, there are plenty of opportunities for retracements and repurchases and so on. And then lithium, same sort of thing. Although this one's moving up quite steadily, and we're now moving up towards the top. Watch out for the 78.6% fib. That's where we are right now on lithium. This is the area of the most concern for resistance. And because this has formed a bit of a stovepipe spike up, it might just need to come back down. And this would be a good area for it to come back down to about the 20-period moving average and the breakout zone. So something like that for lithium. Lithium. Maybe I need some lithium for my mental state. Lithium. All right. And that's it, folks. I don't know if I've missed anything out. It seems like I've gone a little bit too quickly, but we have been going for an hour already. So I don't know what I've sort of missed out. I'm not sure. But if you've got any questions, just let me know. So 6F, I hope that I may have changed your opinion on XRP, but maybe not. Maybe you've got a better idea on what it might do. And maybe you've got some inside info that I don't have. No problem, Rich. Damajan, hi, and good evening to you as well, and to everyone else. Sorry for being late. You're always late, mate. Could you give an estimation about copper? I covered copper, yeah. So copper, we've done copper. NASDAQ 2770, 27,700. Let's have a look at NASDAQ. From Rich, you reckon 27,700 and then down on the NASDAQ. Let's have a quick look at where that might be quickly. 27.7. All right, you mean on this next move? In other words, we could keep on moving up all the way up to there before we even start turning down. 27.7. That's another, we're at, it's another 500 points, 400 points above where we are. Possibly. I've only got a very small short position on here. You know, as soon as we can, we are going to pull back. There's no doubt about it. The markets just do not carry on moving in one direction forever. And we've got a small enough position on there to add a little bit more if we go higher, you know, whatever. It's not again, it's a counter trend trade, remember. I'm looking like gold and silver. I'm not massively leveraging these shorts. I don't use leverage anyway, but I mean, I'm not loading these shorts up. These are counter trend retracements just to occupy time, I suppose, and make a few little extra profits in between whilst the market pulls back before we get back into our original long positions on most of these things. Yeah. So that's it in crypto. And let's not talk, crypto is a bit like politics, right? If there are so many violently different opinions on crypto, it's not worth talking about some of the times. Crypto had a long sideways phase in the first half of the year. Yeah, 2024 it was, Damajan. I don't mind Solana, 6F, 6G, SF, I don't mind it. I just don't have as much conviction in Solana as everything else. Crypto is about to crash, right? Well, we'll see. We shall see. We shall see. I don't think that's true. And if you are betting on that, good luck to you, honestly. But you might be right. And you might say to me, if you're betting on crypto moving higher from here, good luck to you. And you'll say that to me as well, I'm sure. I hope you wish me luck. But I think I'm right and that you might be wrong. But I'm willing to adjust and you might not be willing to adjust. That's the problem with most traders, is that when I'm wrong, I know I'm wrong and I change my ideas very, very quickly. And I'll tell you when I'm wrong. And I'll exit my trades, or I'll hedge them, or I'll abandon the idea completely if it looks totally shot. But most retail traders will never abandon their ideas. And if you're wrong and I'm right, you'll probably stay wrong. Not saying you, please don't take offense. I don't mean you specifically. In general, you might stay wrong and whilst I'm right. But if I'm wrong and you're right, you might stay right, but I won't stay wrong. I will switch direction, abandon it, hedge, stop loss, stop things out, whatever. That's just an easy thing to remember. When you're wrong, get out. When you're wrong, get out. And I always say to my private group members, hedge early, you know, enter the hedge early, protect your position as soon as you can, not too early. Don't get caught up in the chop. Don't start trading in the chop, but protect your position as early as sensibly possible, and then undo the hedge as late as sensibly possible. In other words, don't be in a hurry to exit the hedge. And by doing that very simple process, you can avoid a lot of the stress in your trading. So, hey, Vishesh, no, I'm great, mate. I'm all the better for seeing you, honestly. And I'm pleased that you're here. Thank you very much for making it. Much appreciated. So all the best for seeing you. All the better. All right, folks. Well, it's been a fair while already today, so I think we must end off. I thought it would take a little bit longer, but I did want to get through those notes for you at the beginning and just remind you right now as we're speaking, and I'm going to quickly read those out to you perhaps, that welcome once again to all the new members and all the new subscribers. We're getting hundreds of subscribers every week. I say it's because of my great thumbnails, but other people say it's got nothing to do with that. I'm joking. But we're getting hundreds of new subscribers every week. So, and when you come into a new environment like this, you don't really know what's going on, what our ideas are based on, or what we're trying to achieve. So spend a little time. Don't take trades based on what I'm saying. Don't do it. I'm going to read this to you again quickly whilst we're here. We get hundreds of new subscribers every month who may not understand my videos. I tell you some of my trades, but not all of them. And they change as the market does. Most traders on YouTube do not tell you their positions. And even if they do not admit to being wrong when they are wrong. But I do. No trader is always right. Traders who watch my videos sometimes blame me for their losses. Don't do that. Grow some courage and own up to your own lack of skill or mistakes and try to do better rather than blaming some rando on YouTube, i.e. me, whose credentials you have no knowledge of at all. And that's really what I wanted to say. Don't follow YouTubers for your trade ideas and your positions. Get your own ideas. Understand why you're taking your trades, why the market will probably move in one direction or the other, and why the level that you're considering to enter the trade might be a good level to enter. And if your answer to why is because someone on YouTube said that was the reason, then you've done it completely wrong. If your answer to why is, well, we've got this macro environment which is driving asset prices up, and we're going to get a 38% retracement most likely, which is normal in most markets in a strong rally. We probably won't get back to 50%, so I'll go with 38.2. That's at this level, 25,800. That's my plan. If we move down below that, I'll hedge at this level, and if it moves up in my favor, I'll get out at this level, take profit, or hedge in to lock in the profit, and then look for the next trade. If you can answer me like that, then you're doing the right thing. If you say to me, someone on YouTube said, this is the right trade to take, and I believed him, and so I took it, and I lost my money, you've done the wrong thing. And with that, folks, I'll leave you and love you and wish you all the best for this coming week and for the rest of your lives, really. I hope you have a wonderful, happy, and fulfilled lives, all of you, as I wish for everyone else. And but more specifically, good luck with your trading. If you've got any problems, come and join us in the private group. We trade all day long, and it's open 24/7. And if you're lost, there's a place where you can find direction. Take care. Have a great evening. I'll see you in the next video tomorrow morning. Make sure to press the like and thumbs up thing, and press the notification bell and subscribe to the channel if you want to make sure you don't miss these videos. I'll see you soon. Have a good one. Happy Sunday evening, and peace out from James. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.